Here to make the bull case is Mark Kelley. He's a Stifel analyst with a 185 price target. In the bearish camp, Barton Crockett is over at Rosenblatt. He's senior analyst and MD there, and he has a price target of just 104. It's great to have you guys both here. Mark, make your case. How does Meta get to 185 with the myriad challenges and cost-cutting moves they're facing?
Yeah, sure. Thanks for having me. So I'd say the first thing is, there's a lot of focus on the metaverse investment, rightly so. But I think, the underlying business is actually doing a lot better than people would expect. So there's a couple points there that I want to make. One is that, we're lapping the changes that Apple made last year that really made it hard for advertisers to become very measured in terms of who they target and how they actually look at their return on investment. That's getting a little bit better. Meta's making some changes to their ads manager in terms of having a longer look back to see what the attribution is for some of your advertisements. You can get more granular. So there's reason for advertisers to come back to the platform that maybe didn't spend as much over the past year. And then lastly, the metaverse investment is definitely important, but I would say our expectations are that they're going to march down their total expense growth throughout the year, which means numbers should revise higher as we progress throughout 2023.
Mark, I just can't get past the metaverse investment, though. So you're saying you think that Zuckerberg's going to blink. Even though it's a controlled company, he can do what he wants. I mean, he says he's going to spend another $10 billion plus on the metaverse. You think he's going to go, actually, I'm not going to, because it seems like no matter how well the underlying business is doing, he's spending the bulk of that on the metaverse.
Yeah, that's fair. I mean, to be clear, I do not expect him to completely reverse course. They changed the name of the company to Meta, after all. But I do think, the company put out an 8K shortly after they reported Q3, which already brought down their OpEx assumptions a little bit for 2023. So I don't expect him to completely reverse course, but I do expect him to listen a bit more to investors, as he gets deeper into that investment cycle.
Okay, Barton. On the other hand, Facebook, Meta, does have a history of sort of sandbagging their expenses and then saying, oh, well, actually, we're not going to spend that much. So even though you've got this bear case, isn't there a likelihood that Mark Zuckerberg might, in fact, say, well, actually, we're not going to spend that much, even though I said so, and then there goes the bear case, up in flames?
Yeah, look, even if you spend less than the initial guide at the degree they did last year, the low end of their guide for expense growth is up 11%. Last year, they beat by 5%. So you're still up, 6%. You're coming into the year with revenues down, the fourth quarter down 3 to 11%. Good chance that we're going into a weaker economic backdrop, maybe a recession. So, I think you have to believe that the revenue bias is more to the downside than the upside from that macro perspective, certainly in the first half. The consensus has 5% revenue growth. I think that's too high if we have a recession next year. So I think you've got down revenues, you've got rising expenses, you've got a consensus that's too high on earnings and on revenues. And I don't think that's a great setup for the stock here near term. Layer on top of that, questions about audience. They've been flattish in reported overall metrics, but I think everyone understands that they have a youth challenge. And I think that there is also this question about the impact of their kind of new revenue initiatives. Click to Messenger is an area of great excitement, $9 billion annualized revenues recently. But even with that, the revenues have been weak. So it just tells you that the other stuff is even weaker than people were, perhaps expecting.
Barton.
So I think you've got a company that's transitioning, and it's a difficult time to want to be, overweight at this point in Meta.
You say that they are, the Reels transition is rocky and perhaps challenged. I'm spending a lot of personal sweat effort trying to figure it out. So is it worth it? Isn't that cannibalizing TikTok, especially given the rhetoric coming from Washington lately, where even Janet Yellen made it sound like perhaps TikTok could be banned? And if so, isn't that hugely bullish for Meta?
Look, I don't expect TikTok to be banned. If it is, yes, that is very bullish for Meta. I do think that, what Meta is trying to do with Reels is bolt on a recommendation of content format that takes you away from getting what your friends and the celebrities that you're following are recommending, which is a change in what they're all about on Instagram and on Facebook, that there's some reason to suspect that their audience is rejecting that it doesn't feel authentic. And that's, I think, you're seeing a lot of the innovation money in advertising is no longer going into social media. That's going into connected TV. That's going into TikTok. And social media seems to be a source of funds